Good afternoon, and today we want to take a quick look here at the livestock markets. And when looking at the livestock markets, we want to look at both the product trade and where futures are at. So the first thing we're going to take a look at here is the CME Box Beef Index. I mean, this is just a good guideline to look at where beef prices are at, and the chart in front of us is where they've been the past year. You can see we've had a low last January around 274, then our summer high up near 323. Right now, give or take, right around $300. We're more in midpoint of this range. But now when we look at where front month futures are at, they're trading up at the higher end of the range. That's where we got to be a bit cautious in here right now with this cattle market. If we're going to be stronger and if these futures prices are justified, we need to see this box beef value appreciate. If box beef values hold here, we just read futures as vulnerable to a break. Now, when we look at the commitment of traders report, we just like to point out that you've got the long position by the speculators is getting near a record point. Sure, they've been bigger net longs back in 2019 and 2017 and 2014, but yet this is getting to a bit high of a position. So when we look at where the beef market is at, we consider where the specs are positioned in here. We just question how much more upside we really have in this cattle market. Just taking a step back, risk to reward would probably favor a little bit of a break. Now, over in the hog market, when we look at this pork cutout index, it's actually getting into the lower half of the trading range here this past year. It bottomed out at the end of 2023 around 82 bucks, and the pork cutout index then traded a high up above 105 this past summer. Right now, it's currently sitting at $91. Now, when we get to front month futures, which is a December contract right now, we're just above the midpoint of the range. And once we look at the February or get to the April and summer month contracts, we're well above where those highs have been. That's something we need to keep in mind. Where this hog market has gotten a big rally from, though, is speculators have built up a record net long position. This bullish catalyst with this aggressive spec buying has pushed this market into new highs. Now, as we wrap things up in here today, these are some things you got to consider. Futures have led the product market higher. If this market is going to be good and if cash prices are going to stay strong, we need this product market to pick back up in both the beef and pork side of it so packer margins stay positive. The other thing got to keep in mind is deferred month contracts are offering a premium to where front month is at. We did these quotes here before the market opened today, but you've got April cattle about $2 above where Deese is at. When you get over the hog side of it, April has got a nearly $9 premium to December. Long term, the product trade eventually determines where the cash is going to be at. So as we look ahead in here on this cattle and hog side of it, whether if it's Feb, April, or towards next summer, we just read these are some values to protect, especially considering from where the product market is trading. If you have any questions regarding the livestock markets, feel free to reach out to us. Have a great day.